Hi, I'm Mike McCarthy from Real Broker Ontario, and welcome to my December 2024 market analysis for the Hamilton residential real estate market. Today, we'll break down the key trends in prices, inventory, and sales, and explain how recent interest rate changes are influencing the market, and give you some insights to help you navigate 2025. Now, let's dive in. Let's start with prices. In December 2024, the median sale price came in at $720,000. Represented a $5,000 drop from November. And year over year, however, prices are up 2.1% compared to $705,000 last December. And this puts December's price within the expected range for 2024, with the highest price of the year being $754,000 in March and the lowest in July at $714,000. Overall, it was a very stable year for price fluctuations, as you can see from the chart here. But let's not forget the bigger picture. Prices are still 25% below February 2022 peak, showing the lingering effects of higher interest rates over much of the past 3 years. While rates have begun to drop in 2024, the market has yet to really feel the full impact of this shift, and buyer affordability remains constrained. Now, next up, let's talk about market velocity. Properties took longer to sell in December, with the median cumulative days on market rising to 54 days, up from 43 days in November. That's a 25% increase, and while this is typical seasonal slowdown, the year-over-year increase from 49 days last December highlights a market that continues to adjust to soften demand. And for context, pre-pandemic, Decembers typically saw cumulative days on market closer to 20 to 30 days. So the current levels reflect a more balanced and slower paced market. Now, moving to inventory levels, we saw 4.3 months of supply in December, up from 4.1 months last December. And this places the market firmly in balanced territory, neither strongly favoring buyers nor sellers. However, the 2024 figure is still significantly higher than the 10-year December average of 2.3 months, just showing how inventory has shifted toward a more buyer-friendly environment since the pandemic-induced lows of 2021. Now let's look at sales activity. In December 2024, there were 345 units sold, down almost 30% month over month from 484 units in November, but up over 10% year over year compared to last December. And for the year as a whole, 2024 ended with just over 6,100 total sales, making it the lowest year for sales in the past decade, slightly below last year's number of 6,141 units. This reflects the ongoing impact of affordability challenges, even as rates have begun to drop. New listings in December totaled 382 units, marking a 21% decline from 482 units in November, but a 23% increase year over year compared to last December. Now, this modest recovery in listings signals some confidence among sellers, likely due to the anticipation of increased buyer demand. But overall, new listings remain below historical norms for December, which has averaged 460 new listings over the past decade. The sales to new listings ratio for December was 90.6%, a sharp increase from 55.8% in November, but this is consistent with seasonal trends. However, the ratio is down from just over 100% in last December, and well below the 10-year average of around 115%, indicating softer buyer demand relative to new supply. Finally, total active listings ended December at 1,497 units, down from 1,988 in November, reflecting almost a 25% month-over-month decrease. However, this is up 18% year over year from 1,266 units last December, showing a rebound in inventory levels. Compared to the 10-year December average of just over 1,000 units, inventory remains very elevated and indeed saw the highest amount of inventory at year-end over the past decade, giving buyers more leverage heading into 2025. It's important to put all of this into the context of interest rates. And after steep increases in 2022 and 23, 2024 saw rates start to decline, including a cut just last month. And while this should eventually support a market recovery, affordability remains an issue due to the higher baseline rates compared to pre-2022 levels. And this lag in response explains why buyer demand hasn't rebounded as strongly as some might expect, even with inventory levels rising. So what is the bottom line? December 2024 capped off a year of stabilization and gradual adjustment for the Hamilton real estate market. Prices are holding steady. Inventory continues to rise, and the market is moving towards balance. But with affordability still a challenge, the effects of recent rate cuts may take some time to materialize. Thank you very much for watching. If you have any questions or insights, leave them in the comments below. And don't forget to give this video a thumbs up. I would appreciate that. I will see you next month for another market update. And until then, take care and have a great start to 2025.